Good morning. Welcome to Tuesday, September 13th, 2022's Municipal Airport Authority meeting. Before we start, I'd like to go around the gallery and have people that are in the gallery introduce themselves for the benefit of those people online. Can we start down on the end, please?
Yes, my name is Randy Johnson. I'm with Brown & Brown.
Okay, thank you.
Brennan Quintus, I'm the CEO of the North Dakota Insurance Reserve Fund, but here representing the North Dakota Public Health Insurance Trust.
Thank you.
Jeremy Sobolick with Fargo Jet Center.
Dan Bowles, Municipal Airport Authority.
Rick Sparks, Commercial Realtor, Cityscapes Development.
Scott Selzler, First International Bank and Trust.
Jeff Klein with Main Hunt.
Terry Stroh with Teal Star Effects and Interiors.
Darren Anderson with the Airport Authority.
Megan Burns, paralegal to Stacy Monster.
Thank you. And we have the full board present today as well. First item, approve the minutes of the regular meeting from August 23rd. Can I get a motion?
I'll so move.
And a second.
I second.
We have a motion and a second. Any comments, concerns? None? Roll call.
Lind.
Aye.
Cosgrove.
Aye.
Capitan.
Aye.
Heckman.
Aye.
Aye. Moving on to number 2, approve airport vouchers totaling $254,608.75. Can I get a motion?
I'll make a motion to approve the vouchers. I'll second.
We have a motion and a second. Any questions? Conversation? None? Roll call.
Lind.
Aye.
Cosgrove.
Aye.
Capitan.
Aye.
Heckman.
Aye.
Aye. Moving on to number 3, approve individual vouchers. A, Sun Electric, $5,260. B, TF Powers Construction, $3,036.87. C, CMTA, $35.70. D, CMTA, $960. E, Sun Electric, $140,749.74. F, Flint Communications, $26,649.33. G, Border States Paving, $206,835.76. Any questions? Can I get a motion?
I'll make a motion to approve the individual vouchers as posted.
Second, please.
Second.
We have a motion and second. Questions? Roll call.
Lind.
Aye.
Cosgrove.
Aye.
Capitan.
Aye.
Heckman.
Aye.
Aye. Moving on to number 4, receive July financial statements.
These were sent out to you last month, and Jamie is online. Jamie, are you there? If you have any questions, the board had requested that Jamie from Balance Tax and Accounting be here if you have any questions, so fire away. If you have anything.
John, any questions?
Jamie, I'm hoping on one of these meetings you could be with us here in person and just walk through the various fund numbers and how the revenue is generated within those funds and the expenses and who controls what, just so we each know what's happening in each of those funds. I mean, we get the reports, but I think it'd be helpful just to talk through and look at each of those and what are the things that can impact or change within each of those funds. Some of them are pretty cut and dried. Just a little in-service training for all of us.
All right, thank you. We don't need to approve, do we? We should receive it. Okay, motion to approve the receipt of the July financials.
So move.
Second.
Second.
Any conversation, concerns? None? Roll call.
Lind.
Aye.
Cosgrove.
Aye.
Capitan.
Aye.
Heckman.
Aye.
Aye. Number 5, receive update regarding North Dakota Public Health Insurance Trust. Brennan? Yeah, please.
Thanks for coming, Brendan. This is
Yeah.
a continuation of our conversation from the last meeting where there were some questions about the trust and tiers and so forth, so thanks.
Sure. Well, I appreciate the opportunity to come in and visit with you and really just here to answer any questions and provide more insights from the board perspective. I serve as the chairperson of the board of the North Dakota Public Health Insurance Trust. So I guess open to questions or
I think, John, you had some.
Mr. Chairman, Brendan, could you walk us through your process? When this was presented to us, it was presented to join a group, so you don't get the whipsaw effect of small groups. And that we would be in with larger numbers, so we wouldn't see these tremendous changes. So 12 months in, with a month or two to go before we have to renew, we suddenly are told you're tiering by claims and hitting us with a 17% increase, giving us no time to react or even go out and see what other options we have. I'd just really like to understand, what were you thinking in that process?
Sure. Now when did you receive the renewal? I believe that would have been early August, right?
Right.
Right, so about 4 or 5 months ahead of time, yeah. Well, I'll give you just a little bit of background perspective from my seat. So I serve as the CEO of the North Dakota Insurance Reserve Fund. And, the North Dakota Insurance Reserve Fund first started down the path of looking into a self-insured trust for local governmental entities back in, 2018, 2019. We heard from many of our members, which includes about 95% of local governments in North Dakota. So all the counties, almost every city, almost every school district, and then 95% or so of all other local government entities. Heard from a lot of them saying, we want another option for our health insurance. We think, just as you said, we don't have any consistency with our pricing. There aren't a lot of options available, and we don't like some of the plan designs or structures that are made available to us. And as mentioned, we started exploring what a self-insured trust would look like for local government. And we visited with a lot of different folks, consultants, other groups that have created self-insured trusts, tried to identify some of the risks, some of the benefits of doing that. And while we were exploring it on the North Dakota Insurance Reserve Fund side, we became aware of another group out here on the eastern part of the state, the Southeast Education Cooperative, which is a regional education association. There's 8 of those in North Dakota. The Southeast Education Cooperative actually serves the southeastern part of the state, so Fargo, West Fargo, and all the other areas. They were actually doing the same thing, but looking at it for school districts throughout the state of North Dakota. And once we found out about what each other were working on, we said, you know what, we're kind of after the same goal here of creating more consistency with pricing, providing more flexibility, more options for local governments. Let's band together and create that. And we explored different options and landed on, yep, we're gonna create it. We're gonna work with an organization called Brown & Brown, who specializes in this type of activity. And so we launched the North Dakota Public Health Insurance Trust back in 2020. And started working with groups. We had about 33 groups initially join us. We were able to renew those groups in 2021 with no rate increase whatsoever. And that's when I believe the Fargo Airport Authority came on board. So then in 2022 was your first year with the trust, correct? And again, that main goal of creating more flexibility, more consistency with pricing is what we're all after. Now, we were able to create more flexibility and more options for local governments early on, but we all recognize as the board that pricing component in the short term is a challenge to create that consistency. It's a long-term play, and that's what we've tried to communicate out to our groups that we've worked with, saying, we've got to be in this for the long haul. Over time, you can create that flex or that consistency, and you can. And the reality is, if you plant the seeds early and do the right things early, you can create that better pricing. And you've, I'm sure, have heard stories. We've certainly heard stories of self-insured trusts that are well below the market for health insurance over time. There's a couple groups here in the Fargo area that do that. They're well below the market pricing over time. And I kind of emphasize that. That's going to be the long-term play here. Now, in the short term, as mentioned, the first groups that renewed, we were able to renew with a flat renewal. There was no increase whatsoever. The second round of groups, we've got schools, along with other non-school political subdivisions. A lot of school groups renew in October. And that October renewal of the school groups, we were able to renew at about a 3.5% increase for those groups. And then we looked at the underwriting for this upcoming renewal, so January 1st, that renewal group. there were a few components that came into play. The loss activity was a significant thing for our groups. We looked at what the losses were looking like, who's driving those losses, and ways that North Dakota Public Health Insurance Trust can implement some tools that Brown and Brown presents to help offset some of those losses over time, again creating that better pricing. And then we looked at other components that are influencing pricing within the marketplace. You can look at COVID-19 and the impact that had on health insurance. And then the overall inflationary pressures that are out there. Everybody sees it. I think the report came out again, nearly 9% on the inflation side. And usually the medical trend and medical inflation is much higher than what you see just in the traditional inflation metrics that you see in the marketplace. And so when you look at all of those factors, that's what the North Dakota Public Health Insurance Board was presented with, saying, we did an actuarial analysis, which is a prudent thing for a public health insurance trust to do. Looking at what the actuary came back with, they said, you need a substantial increase. And how do we break that down to fairly allocate that increase across all of the groups? All the while making sure we prevent adverse selection within the North Dakota Public Health Insurance Trust. Now, adverse selection is a significant issue, especially for health insurance trusts or on the reserve fund side, the property and casualty industry as well, especially early on in your programs, but long term too, you've got to stay away from that adverse selection piece. And adverse selection is simply the groups that are contributing to the high loss activity end up having no choice and needing to stay with the North Dakota Public Health Insurance Trust or another insurer. But those groups that have low loss activity get picked off by some of the competition. They leave the groups. They leave the group, and then what you're left with are significant loss activity. And over time, you can see how that creates what we call the death spiral in the insurance industry, where they're just rates are continuing to go up, and the financial component of the trust just continues to deteriorate. And so we looked at it from a board perspective and said, we've got to prevent, especially in the near term here, those good groups, the groups that have much lower loss activity, which if we can keep those groups in the trust, that will help not only the good groups and the North Dakota Public Health Insurance Trust in general, but even those groups that are contributing to high loss activity right now will help offset some of those increases over time. And what we've seen in the marketplace are groups with low loss activity. You're seeing pricing between 5% and 8% increases this year, just with the inflationary pressures that are out there. But we're seeing groups with large loss activity upwards of 20 to 25% increases with health insurance when you factor on the medical inflation and all of those other components that come into play. And so to protect the financial integrity of the trust, the board was presented with a few different options. First, we could obviously issue just a flat renewal for everybody and say, okay, you're going to get flat, meaning everybody's going to need the same price. Okay, we needed to increase pricing for the trust, and we could have issued pricing that was flat for every single group. But again, we've got many groups within the North Dakota Public Health Insurance Trust that are operating at loss ratios that are very attractive to other health insurance companies throughout the state and the region. And so, one issue that we work with the North Dakota Public Health Insurance Trust is our relationship with Blue Cross Blue Shield of North Dakota. They're the claims administrator and then the reinsurer. They get firsthand data into the groups within the North Dakota Public Health Insurance Trust, and I can assure you, they know the groups with low losses and the groups with high losses, and they know where our pricing is at. They'd be able to come in and say, okay, if you have a 9 or 10% increase to the Public Health Insurance Trust, maybe we can come in and give you a little bit more incentive to join Blue Cross Blue Shield again, or come to Blue Cross Blue Shield. So we're keenly aware of those competitive pressures that are out there. And again, preventing that adverse selection piece, rather than going with a straight percentage renewal for every single group, we thought it would be in the best interest of the Public Health Insurance Trust and then all groups that participate to look at a tiering structure and try to fairly allocate where that increase is coming from. And so that's where those tiers came into play, saying, okay, if your loss ratio is X amount, here's where your pricing is going to be, and then kind of all the way down the line. And so that was really the thought process that went into it, trying to protect, again, that long-term play of what the North Dakota Public Health Insurance Trust is by preventing that adverse selection piece early on.
You know, a lot of what you talked about was very predictable. And I'm just wondering in this process, perhaps I missed it, but we never discussed tiered pricing. And so to me, you made a huge, significant change where we're barely 1 year into this plan. Given the information of a 17% increase 1 year out, I doubt we would have switched. And so I'm really concerned about that. Everything you talked about, actuarial studies, all that was available to you on the front end. So it feels like, and I think, Jim, you said a real bait and switch situation here. Now, you also had groups you said that renewed with no increase. But again, the remaining groups that you're saying based on experiences have to take these large hits. Are we carrying those other groups with the no increase at this point?
Yeah, I'll address a couple of things that you said. First, the last thing you mentioned where every group got an increase this year.
Right, from 2% to 17%.
Yeah, so every group saw an increase and it was based on their loss activity. So those groups that had lower loss activity had the lower increase. But with regard to the tier pricing and the pricing structure in general, I know we had discussions early on about are we going to allocate pricing based on loss ratio? And my insurance background, I advocated on the board saying, yeah, you have to. You have to base some sort of pricing component on loss ratio. You can't continue to have those groups that have high loss activity be subsidized in whole by those groups with low loss activity. I would argue very strongly that even at a 17% increase, your rates are still being subsidized by those groups that have a lower loss activity. As mentioned, we're seeing in the marketplace between 20 and 25% increases for groups with high loss activity. That's the nature of insurance. We do that on the property casualty side, we do it on the health insurance side through the public health insurance.
And you were given our loss ratio in previous periods, so you had all that to study when you quoted us rates?
Yeah, we had the data that was presented to Brown & Brown, and my understanding of the process on the underwriting side is taking a look at the historical loss activity of the group, looking at historical pricing and seeing where we need to price it at when a group enters the plan. Now, I would push back a little bit on predictability of what's happening. Sure, we can look at long-term saying, okay, actuarially, some of these groups might be where they're at, but I'm not sure many people predicted some of the loss activity that we've seen within the North Dakota Public Health Insurance Trust. I certainly would assure you that we weren't, the North Dakota Insurance Reserve Fund, the organization that I serve as the CEO of, is a participant in the Public Health Insurance Trust. So we're
even as you pitch this product to us, though, discussion of look, the potential here is for tiered pricing. Would have had a big impact on the decision that we made, and so, I'm really struggling with this major change in a plan less than 1 year in and a huge impact to us, of which we have no control over. I mean, we have to take that 17% increase and figure out how to pay for it. And we're not gonna do it on the back of our employees. Going forward, again, based on small group loss ratio, which is one of the things we wanted to avoid, we could have a 17, 25, 30% increase with all these unknowns that haven't been predicted. And so I really struggle, given the timing. I know you say you had 4 months, but to go out and look for a new insurance carrier to go through, do bids, figure out what's the best outcome, how does it match up, and then even time to be able to transfer our personnel over. You gave us no time, and I really think that's an unfair situation, that you hit us with a big increase, you hit us with a new pricing scheme we've never seen, and you gave us no time to react to it.
historically, when were renewals delivered to Fargo Airport Authority from your prior health insurers?
I'm not talking about historically. Historically,
What
we
I'm
would have
saying-
stayed with that plan versus your plan. What I'm saying is, we've seen price increases, but we have not seen a major structural change to the pricing model as you've done by putting the tiers
I'm not sure I can follow what so sure, we made a decision on the board to go with tiered pricing. I'm not aware of any type of guarantee or communication or anything like that that said we weren't going to allocate pricing based on loss ratio, because I can assure you, those discussions were being had.
Well,
Within
that's not the
the
product that we
insurance
bought into, though, the product that we
John,
bought into.
I think the real question is, you used the term pool, and you didn't identify the pool as segregated pools, and that's a little misleading. You used the term pool in the insurance trust, not segregated pools, and that's hard to swallow, because it is not a pool, it's segregated pools that you defined after the fact, and that is where we have an issue.
So it's not in, as I had mentioned before, we group, every group is involved in the underwriting process. And I can assure you, there are groups right now that are being subsidized by the lower loss activity groups, due to the nature of the structure of the public health insurance trust. Again, we are pooling our risk together, and we have some groups that have some pretty high loss activity, and we have some groups that have some pretty low loss activity. Those groups that have pretty low loss activity, are seeing a much smaller increase, but at the same time, they're still seeing an increase. And those groups that have high loss activity, that increase that they're receiving, including your group here, is much lower than what we would see in the marketplace, considering the loss activity that we've had. While it's tiered pricing, it's still in a sense being subsidized by other groups within the pool. So you're still seeing the benefit of that pool structure.
And that's what should have been priced in with your original pricing to us. And-
John, to the extent COVID happened, there are so many unknowns.
Oh, no,
Past few
and
years.
this
I think
was
The
post-COVID.
comment for long haul, this is a long haul process, is important. I think we're fiduciaries, so we have to ask the question.
Yeah.
Your term pool wasn't a segregated pool, it was a pool. And actuarially, the pool is a little different than a segregated pool. And you have done that, you've segregated it into 4 categories. That was never explained to us ahead of time. So I think we have to eat this premium increase now. Going forward, we would demand much better transparency into the thought of the board and the North Dakota Insurance Reserve Fund's actions into how they're going to accommodate those with a higher loss ratio and inform them ahead of time, so it gives them time to look for other options, whether they're legitimate and available or not. We need to have that, because we're supporting employees and we have a fiduciary duty, and it seems that we've kind of negated that, not by our own actions, but by the actions of the trust.
Sure. First off, it's not the North Dakota Insurance Reserve Fund product, it's the public health. North
No,
Dakota
but
Public Health
once
Insurance
you
Trust.
act as the head of one, that umbrella succumbs to all of them. Unfortunately, with the title, so it's all of them.
Sure.
And
And I would argue that you didn't negate, any fiduciary duty on your part. And certainly we didn't, within the Public Health Insurance Trust either. I think both groups were prudent in how they handled the situation. To speak to just the tiering process again, I think I'm not explaining it well enough, where you're still within a pool. The North Dakota Public Health Insurance Trust is a pool. We're pooling the risk of all participants within that program. Every single group has different pricing, and that's just the nature of that program. You're not going to have the same rate for your employees as another group is. You've never had that within a health insurance structure. There's no health insurance structure that would give you that same rate for as every single group within the plan. And so we had to look at it and say, we're needing to come up with additional funding for the pool. Everybody within the pool is going to have to pay some additional money into the pool because we need a rate increase. That was what the actuaries were telling us. We made a prudent decision within the Public Health Insurance Trust Board to act on what the actuaries were telling us. And in order to look at saying, okay, we need X amount of dollars to make sure that the Public Health Insurance Trust is a viable long-term play, we on the board said, how are we gonna allocate those increases across our membership? And it wasn't saying, we're gonna pool and we're gonna only lump together these 10 groups and they're gonna stand on their own, and the next 10 groups are gonna stand on their own, and the next 10 on their own. It was, no, everybody's in this together, but we had to look at it from a board perspective and say, how can we, again, fairly allocate this across our groups?
So what you're saying is without these changes, the whole pool was at risk, the collapse?
Oh, absolutely. And
No,
not in the sense that we're in financial trouble in the short term at the Public Health Insurance Trust, we're very, very solid right now. What I'm saying is long-term, if a governing board of a health insurance organization, if a governing board of any insurance organization doesn't listen to the data, doesn't look at what the actual.
Hold on a second. So, in a 12-month period, your business plan completely flipped on its head to have to revise your pricing structure to maintain the viability of your pool?
No,
That's what you were saying.
that's not what I'm saying. What I'm saying is long-term, you've got to listen to what the short-term data is telling you.
Right, and that's what I'm saying. You're making this change for the long-term viability.
Correct.
So,
It wasn't a change though, I'll correct you, right? We didn't make any change to our pricing structure whatsoever. Those discussions within the Public Health Insurance Trust were being had from the get-go. How are we going to allocate these costs? One thing you have to do is allocate it based on loss ratio.
right, but so
Simply
in our
not-
12-month experience with you, we've gone into a totally different situation with a different pricing structure based on new data that just occurred in 12 months.
It's not a new pricing structure. You were given your renewal rates based on how the governing board wanted to allocate that funding across all groups.
I think what John's asking is, did they have 4 tiers prior? In 2020, 2021, did you have 4 tiers prior?
We didn't have 4 tiers, we probably had 100 tiers because every single group had different pricing.
Well, that's the pricing that we relied on for you based on the pool concept.
Right, so whenever a group goes into buys into an insurance product, your pricing isn't going to be, you can't, it's not a viable solution to have flat pricing for every single group and the same pricing for every single group.
I'm not trying to say your prices at all. I'm just saying from our experience with your group, you came in, we went through a bid process. We looked for a product that provided a level of benefits we wanted for our employees at the lowest cost. You prevailed in that process. 12 months later, you dropped a 17% increase on top of us. It would have completely blown you out of the water 12 months prior. And I can't believe that information wasn't, that there was such a dramatic shift in the environment and the factors that it needed 17% in 12 months. That's what's hard to swallow. And even the other bidders that went through this process, it wasn't fair to them either.
A couple things I want to respond to. You keep alluding to this concept of the bait and switch, whether you're directly calling it bait and switch or just as you described it, where we came in really low and now we're increasing. That's not at all what's happening here. And I want to be very clear on that. That is not what is happening here. Again, the North Dakota Insurance Reserve Fund, this organization I'm the CEO of, is part of the North Dakota Public Health Insurance Trust. I can assure you, we did not come in and say, we're gonna offer the lowest possible rate for every group and then we're gonna come back the next year and jack up rates. We did not do that. I'm just gonna be point blank.
But you did
That is
do that.
not, the rates increased.
No,
Based on
you
the
did
data that we
exactly what you said you weren't gonna do.
The
You
rates
came in with a
increased
low
based on
rate,
the
you
data
came
that
in
we
with a
had.
big increase.
Excuse me?
You came in with a low rate, you hit a big increase. You
But
said,
it wasn't a bait and switch operation. We did not come in saying we're gonna undercut every single thing and then every single bid and then come back and increase pricing. That was not the plan.
well,
Now,
I'm
can
not,
assure you that-
now we're in the semantics of what.
Well, John,
call
I
it,
think,
but-
excuse me, I think the question is, what would have our rate been had we been standing on our own, the increase? You said 20+%?
I can't speak to your group in particular. I'm saying.
I
that's
think
what the
that was a
marketplace is.
standalone, it would have been more than 20%. And because of the blended accommodation that you created, it ends up being 17%. That is a positive. It's not what we expected, what we desired, but that's where we are, and we as a board, part of this is we need to understand that and understand it for the next 1, 2, 5, or 10 years if we're gonna continue to be a part of this. I do understand that you have participants in your plan that have an extremely low or efficient loss ratio, that losing them creates hardship on the rest of the pool, accommodating them to some extent maintains the pool. We understand that. At the same time, how you relay that to us throughout the year, how you explain that or communicate with this board is important, and I think it needs to change, it needs to be more transparent. I understand everybody's busy, but moving forward, we need to understand that there's transparency and that we know what you're talking about. Your minutes of your meetings, when you have them, it'd be great to have those so we know and we're not blindsided by this.
No, and I really appreciate that comment, and I'll speak to that communication piece. That's something we recognized within the North Dakota Public Health Insurance Trust and our staff, that we work with, whether it's Brown & Brown or folks at the Southeast Education Cooperative, that communication does need to improve from our folks to our member groups, and this is a clear example of that we've got to get out and explain what's going on with the trust, give you assurance and reassurance that you're in a financially viable solution, and it's again a long-term play, and the decisions being made at the board level are to protect that long-term interest and protect the long-term financial integrity of the trust. And so I recognize that, I appreciate that comment, and I'm going to relay that comment back to our board, that we've got to get better in that arena. That our members at the Public Health Insurance Trust need more information, need earlier information, and we'll certainly do that for you.
Mr. Chairman, with the communication thing, the biggest thing that I didn't like was that we got notification at the end of August. We didn't have a meeting. We have a meeting every 2 weeks. We had our meeting and we had a matter of days to make a decision on it. And we couldn't even go to the next meeting cycle. So it was a very, very short amount of time that we had time to work on it or even get notified on it. And that goes to the communication piece. And if you're gonna make choices like that and change our plan or change our rates or whatever, we need to know more than 30 days out. You know, we need to know like 60 or 90 days out.
And
In the
60
future.
or 90 days from,
I don't know. We got in our last meeting. I was in Mexico, and we had 3 days to make a decision on it. And well, that's not enough time. So, and that just goes to the communication
I
piece.
think we vented and voiced our concerns, and I know this is all work, it's all in progress as we move forward. I guess one of the questions that I would have is, our rates are going up 17%. What would have they went up with an outside vendor? I'm guessing they would have probably been 15 to 25% because their actuarial numbers, there's not a lot of deviation in pools and the actuarial numbers that go based on loss ratios. And so we probably would have been in a similar situation. But the hope would be that we were informed in a little more efficient manner. And I guess that's what it boils back to is communication.
Yeah.
So moving forward, we need that, we have a fiduciary duty, so.
Keep in mind, when Dave Meadow ran a bunch of options for the board, we were doing this transition, our only option for a group of our size was age-based. If you're 57, here's what the rate is. There is no negotiation. And those rates were through the roof. The other thing, Brendan, is to confirm that when an eligible organization joins the trust, it's a minimum 3-year commitment, correct? So
it's
won't be
a 2-year commitment.
2 years. So this would be the last year to commit, and then, so going into 2024, we have options to go into the market, but they're gonna be age-based options because we only have 20-some people in the plan, so it's not like there's another option out there for us other than doing the age-based, which is, well, you saw the numbers.
Yeah, and one thing to consider as well, the prior plan we were with the city, it was a grandfathered plan, and not under the Affordable Care Act as well. So there were not benefits afforded us in that plan that are here, and that's a cost savings as well too, that there's inclusion. So it's, granted we pick on you, we understand there were more benefits afforded those employees that participated and their families as well. So it's not one-sided, we understand we are getting a benefit as well.
So Pro Resources will be able to provide us a quote, just an FYI quote for us this year, because they're representing 12,000 employees through Pro Resources. We're part of that. So that could be an option going forward. to, I think the Public Health Insurance Trust is gonna be for benefit long term, there's no doubt.
The county ended up with a 12% increase in their health insurance. I know the Blue Cross Blue Shield had recommended almost a 17%, and the county isn't with them, they're with some North Dakota, they're self-insured, whatever. But they ended up with it. According to our finance director, they can make it work with a 12% increase, so.
Yeah, and that's, if I can speak to that a little bit, so, I'm guessing you're talking about Cass County.
Yeah.
And Cass County is self-insured within their own program. That's the concept we wanted to create for all local governments, is give them that self-insured option where you've got the opportunity to make those types of decisions. Now, at the Public Health Insurance Trust Board, we could have looked at the trust and said, you know what, it would be an option for us to not increase the rates according to what our actuaries or our companies are telling us, and try to eat that within our surplus. And we've made the decision not to do that, not to offset, through surplus what a rate increase is, because at this stage of the program, that wouldn't be a good long-term option for the trust. That'd be a short-term decision that would deteriorate that program, and we didn't want to do that. So we were making decisions again with that long-term view, saying we need to protect the financial integrity of the trust, and how do we fairly allocate those increases across our groups.
We appreciate you coming here and talking to us face to face. That communication helps.
Well, and I appreciate the opportunity to do that again, and I can assure you, we will push hard to improve that communication, as time goes on. And Sean, certainly, if there are any times where you need me to come back and visit, I'm more than happy to do that.
So with the January 1st renewal, what's a reasonable expectation of when you know loss history in a year? So for calendar year 2023, when are your actuaries going to have a sense of, so you can provide a viable quote for January 1st? Is it August? Is it July? July seems early. What is that range?
Yeah, I can say just offhand here, relying on say 6 months of data is still a challenge to tell you what your rates would be, January 1st. But Randy Johnson from Brown & Brown is here. And Randy, can you speak to that a little bit?
Yeah, so I'll explain. Do you want me to come up there?
Please. Yeah.
Getting the information too early isn't probably real good on your part when you don't have all the data.
Yeah, so a couple points I'll speak to. First of all, I want to address the question about your specific loss activity. It was actually 144%. So if you'd have taken that 144% loss ratio, added medical trend, which is 7.3 for medical and 8.4 for pharmacy on a blended basis, plus you add fixed cost to that 144%, you would have been over 175%. So that's the value you actually got out of being part of the trust. It was subsidized by all the groups that Brennan referred to. And that's really important because that is, as Brennan mentioned, the objective is to be in that structure. So there is subsidy and there's fairness at the same time. And more importantly, that it has the ability through that structure to have the long-term stability that we're all trying to get to. Because I can tell you that.
Excuse me.
Go ahead.
The insurance is the sharing of risk.
It is. It absolutely
It is the sharing of risk.
Yeah.
And when you start to bifurcate and say this group has this loss ratio, this is what we were trying to avoid.
Yeah.
And I have to take exception that we all have insurance. We all insure against catastrophic losses. This is a catastrophic loss time for us. So, really, I don't think we need to keep going back and trying to
No, I
justify.
understand.
It is what it is. It's a 17% increase. There were changes. We didn't like the communication. The question we want to ask right now, how quickly next year can you tell us what the proposed rate's going to be?
Right.
That's very simple. It's
And I
just
appreciate
July,
Before you answer
August.
that, John, to be fair, you're trying to get actuarial numbers for as many periods, monthly periods. And so it's really not a fair question to ask because the more months you have of information,
More
the more
predictability.
accurate it
No,
is. So you
I
can say, I
understand,
want it in March, you're gonna get
no,
3
no.
months. It's gonna be.
If you just tell us what the date is, if it's July, if it's August, if it's October, we have to then be prepared better, so when these numbers come out, we may have already gone out and looked at other options, just in anticipation of another increase. So we just need to know,
So
when
the way that
can we
look-
expect that?
The way we look at it, to answer your question, is a rolling average of 36 months. It's the midpoint of each 12-month period, and that goes forward. And as we get more data, we weight more traditionally to the most current period versus going back 36 months.
Can you just say July, August, September, October?
I could say that, but I would need you to understand the process, because that's really important. Because if you don't understand the process, then it shortchanges the understanding of how you come up with the ultimate rate.
So should we just plan on it being August again?
Yeah, so typically the self-insured groups that we do, and is that it's usually by July to August period, because one of the other factors is Blue Cross, who's our reinsurer, won't release that stop loss renewal component to it, which is also a function of the premium. They won't give that to us typically until even close to September.
So, no, I just wanna know August, so if we were gonna try and do a rate comparison, we
Yeah,
should be looking for bids and quotes in June, July.
It's actually a little bit different, so let me set the stage on this statement. And that is, you're in a 2-year agreement, but you have to give a 1-year notice if you intend to leave. That's part of the provision of the agreement, okay? So if you intend to leave, then you need to tell us now.
We need to start right now, then. Okay.
But you don't even have rates to make that determination.
Well,
on a
and that's
comparative
again to
basis.
the timing issue of this whole thing and how frustrating it is.
And to be fair, we'll only have 18 months worth of data from us.
That is correct.
Yeah, so
So you have immature data, which you're trying to make long-term kind of comparative information on. And I can tell you, if you're in an underwritten pool, even if you're part of a PEO, they're gonna they wanna get claims data as well. Because they're gonna set rates based on the same information. Otherwise, you're going back into the fully insured environment of 50 and under, which is what you're referring to, you get age-banded rates. And then you're into what they call the ACA metal rates, which are much higher than what we gave to you. I can tell you your plan design is mirroring the NV PERS program. Your rate, even at close to $600 for an individual, compared to the NV PERS pool, which is almost $800 for an individual. So they took and modeled your plan into the NV PERS program, so your basis, even starting, is substantially less than what the entire market is for a similar plan that you modeled, that the city did when they started the program. That's important to know, because so you have to look at not what your
When
increase.
is the anniversary date of our policy? If we wanted to give 1-year notice, when would we have to do that by, Sean?
You'd have to do it by December 31st.
December 31st, okay.
But, yeah,
Well, that's
So-
something we should consider.
I don't agree with that.
Well, no, I think we should consider it and have a discussion, not just.
By doing so, then does that open us up? Then that would just open us up to the possibility of renewing or not renewing.
No,
We
we've
could still
renewed, we've renewed.
We're out.
yeah, you're out, and then
It's too
you
early.
could come back to the trust for at least, I think it's a 3-year
I'm not
period
doing
unless the board approves it that way. But there's all those factors that
So,
manage
no,
it.
I'm talking about notice of non-renewal, so we've renewed for 2023. This would be saying we wouldn't be coming back for 2024, which may be an impossible task to get, bids for
'Cause yeah,
premiums out in
that's the
2024.
issue, you're gonna have to know
Which
all that
again,
weight.
you know, is a little frustrating, but.
So, John?
Yeah.
I think the reality of the comparative data, because anybody we would send bids out to would have our actual loss claims for the past and would use that. And honestly, that wouldn't benefit us
It's
one
not
bit.
gonna, we can
Yeah.
give you your data, I can tell you everything about that's going on in your group that I could share with your PEO or anybody else that wants to bid it, and we'd be happy to do that.
Well, no, and I'm just saying, we can look in the market and see what's available. I'm not saying that it would be better.
But you don't just look in the market, you have to provide the
I know,
loss
I know.
data. So you're not just looking at a number.
No,
It's a
and
detail,
again,
it's a
we've
deep
got
dive.
now some new information here. I did not realize there was a 1-year non-renewal clause, which really locks us in.
So
almost.
I think with what we've just seen right now as a board, the educational process that you've just taken us through, the
it-
prior claims,
It is.
the comparative with other plans in the state, all that information should have been presented when you said, here's your increase. Just dumping, here's your increase on us, wasn't very professional. You should have at least sugarcoated a little bit with why and why it's still a great value for us.
Yeah,
And that-
actually, we did make that offer to every group. We said we can provide your specific data so we can show your losses and what's driving your losses as a relative to the entire pool. And I don't know if that was communicated well. Fairness to you, that may not have been communicated well, because that's the whole purpose also, is transparency of everything that's going on. Because if you go back to the marketplace and they give you an increase, they're not gonna give you anything. They're gonna give you a letter. And the reality is, we actually have all of the data to every group specific, and we have to be careful because of PHI. We can't necessarily tell you, sometimes even by condition, because that's easy to determine by 20 people in a group. But at the same time, what you can look at is information that is driving the cost structure. And it's all driven by the things that Brendan mentioned, but it's also clinical components in the distribution of your population at large. And that's the other thing that we're trying to get more information about to all the groups so that they understand what drives the cost of care. So I do agree with Brendan, we have to be much more prevalent to explain intermittently throughout the year what is exactly going on within not just your group, but the pool at large, so you can see all the dynamics that are at play when these decisions are made by the board.
We appreciate this and hope that it benefits other participants in the
It will,
plan too.
'cause-
and,
yep.
It's a learning experience. All right, thank you.
Thanks for your time.
Thank you.
Thanks.
John, you brought up consideration for giving notice of exiting the plan. I don't think our process, starting over, doesn't benefit us as a group, and I would be very concerned if we traveled down that path.
Mr. Chairman, I just wanna, just express my extreme disappointment in this plan. They may be able to resurrect.
Is it the plan or was the process? I think the process was a bit skewed and.
The process was, but the advantage that we were seeking was what they proposed was, you're a small groups are always buffeted by claims and, one or two illnesses within a small pool can really impact it. And what they sold us on was joining this pool to avoid that situation. And 1 year in, they said, oops, we're gonna create pools within our pool. And you're gonna be in the highest tier of those pools. That's the disappointing part. No,
It's still lower than the individual.
but we don't know. I mean, we're using sort of inference that it's still lower, but if we come back again and next year have a 20% increase and a 30%, they've really locked us in a pretty effective manner with a 1 year non-renewal, with late rates.
That's not uncommon though.
No, it's not uncommon, but at some point, I think we're gonna have to look at this and see what else is available in the market. I know it's a tedious, long, awful process. They're not easily comparable. But,
So based on the loss ratio that they described, us going out to the market, we are gonna get crucified. It's not gonna be to our small group.
And Rick, I'm just saying, let's not make that assumption, let's go.
We
forward
don't
towards
have to actuarial, they'll use actuarial numbers and come back with a rate plan. We're not gonna get the best.
That's a real short process.
Yeah, this is an eye-opening experience for any employer. And their ability to explain the process better for our benefit and the benefit of any other participants would be good. It's a learning curve and.
No, I don't think we would have selected this group had they described the 4 tiers and that you're gonna still deal with, your own loss ratio in a small group. If they would have laid that out and
It
said,
wasn't our own, but the issue, they did not make it an all-encompassing pool, they did segregate it.
Yep.
But then
and if they
the-
would have done that, I think the board's deliberation might have been different.
At the same time, had we been standalone, that loss ratio would have pushed our costs up substantially higher. We have to
Yeah,
keep that.
no, again, you know, hypothetical and the real process is that this was a major structural change. That we were not within one big pool, as we were led to believe, this whole pool of North Dakota public institutions. We're now within individual ponds and loss ratios there. I mean, the one thing that happens is, yes, you absolutely want to keep the low loss ratio groups in your pool because it does direct now rates. The reason you raise rates on your high loss pool is to reflect their costs, but also maybe to get them to leave. That if they're too high costs, they're going to leave. So it's
But it's not over a 1 year period either.
well, no, and that's what
Actually,
I'm saying is the whipsaw here in 12 months, these were not conditions that occurred in the 12 months we've been in the plan, that they made these major structural changes. They sold us the product knowing they had these problems. A 20-person pool into this did not flip their balance sheet to the point where they had to make changes this drastically, this quick. This was all part of their structure, and these guys predict the future.
Well, I
That's
don't
what they
believe they
do.
predict the future, but.
Well, they do the
regardless,
actuarial analysis.
Hopefully, this educational process that we've just went through with them and their ability to be more transparent will make this a little easier to swallow in 2023's numbers.
But ultimately, we wanna have a plan that's good for the employees. And do you remember 3 weeks ago when Brandon said on the speaker, he said, well, we kinda hope that, you know, some of the employees will go use their spouse's plans.
Yeah.
And that, for me, tells me maybe this isn't the best plan for our employees, regardless of, you know, how much it costs, just isn't the right plan. Could we do better?
Monitor. All right, moving on to number 6, adopt resolution for distributions and concession relief grant 54 and 56, John?
Okay, so adopt 2 separate resolutions. In your packet was the distribution, Brian Page from Eden Hunt worked with myself and the FAA to get a finalized distribution methodology and plan, and what's before you are the amounts that each of the concessionaires would receive under each grant. The first grant was $102,970. The second, the ARPA grant, was $411,879. And how this will work based on your resolutions that you would pass today is Joan and I would upload those into the Delphi system along with our letters and our background information, and then starting October 1st, each concessionaire would go through their normal process of reporting their revenues due to the airport, but they would not actually remit the payment, or at least the full payment, until the amounts that are shown in the yellow line are attained in their monthly reports. So that's how that would work. It's gonna take some time for Skydyne to probably attain the $228,971 in the one grant. But, so each month they will just send us the report, we'll keep track of it, and then what we do is go online and then download these amounts or request these amounts from the federal government, and it goes into our bank account, and then we internally allocate it to the proper concession account. So that's how.
So, Sean, is there a month delay in getting those dollars, so our books will be off a month, or is it accrued and really no impact?
You know, we'll work with Jamie at BTA, but there would be some delay in getting the federal funds back. Typically now, when we just did some here in the last couple of weeks, 3 days, maybe 4 days is about how long it takes from the time we submit the request to get reimbursed until it's in our bank account. So typically about a 4-day period is what it would be. So hopefully, you know, October, once they get the reports, hopefully by the end of October, we can actually get the federal drawdown.
So can I get a motion? To accept.
I make a motion to accept.
And a second, please.
Second.
We have a motion and a second. Any other conversation, questions?
The only thing I'll mention is that Enterprise Rent-A-Car, which is Enterprise National and Alamo, they declined to participate in all COVID relief distributions at airports that they are in. So their allocation was then redistributed amongst the group.
Why would they do that?
Not sure. They want to be involved in the paperwork, I guess.
Public company.
Okay.
All right, roll call.
Lynn.
Aye.
Cosgrove.
Aye.
Captain.
Aye.
Ekman.
Aye.
Hingham.
Aye. Moving on to number 7, receive communication from CNT regarding East Side Terminal.
There's 2 units here. We went out to bid for the pathogen mitigation project for the remaining portion of the East Terminal outside of the Spectrum space. We only had one bidder, JTech, for $633,900, and CMTA recommended that the board reject this bid and then revise the scope of the project so that at least 2 of the rooftop units would be replaced. I know Dan is here and I think has wanted at least one of those replaced for some time. So what they would do is refine the scope of work, go back out into the bidding environment to just get those 2 old rooftop units replaced. Now, they're from the 80s, I would guess, Dan?
Yes, and actually, right now, each unit has a compressor out in it. They have 2 compressors. Each unit has a compressor out. It's $8,000 a piece to replace those compressors. And they're probably only gonna last 5 years.
So with one, your concurrence of rejecting the bid. The second portion is to modify the scope of the work and an amended fee proposal where CMTA would deduct $900 from your previous proposal that you had approved for this work here. So
Motion to accommodate both.
Why was he recommending that we reject the bid? I read it and I missed that part.
it's about 4 times higher than what he estimated. And I think it's just the bidding environment right now, it's very expensive. Mechanical engineering firms are just too busy.
Okay, so if we reject it and then put it back out as a different bid just to do the air conditioners, is that what you're saying?
I think what we will do at this time is forego doing the pathogen mitigation project in the remaining portion of the East Terminal until such time that CMTA believes that the bidding environment is improved. Regardless, in either bid that we do, these rooftop units need to be replaced.
Okay,
So
all right.
that would just be less for them in the future.
So fix the $8,000 compressors for now?
Well, actually, the
No.
cost to replace both of those units is probably gonna be $100,000+, I would guess.
We want to replace.
It's gonna be
Yeah.
a total replacement.
But like until we can rebid it?
We wouldn't repair them, we would let them go through the process. Can they make it, Dan, without the compressors?
Yeah, I mean, well, especially now that's cooling down. The compressors are for air conditioning,
Oh, okay.
and we made it through the summer with just 1 compressor in each one of them. We would have been in trouble if the other compressor went out.
So we won't repair, we'll do total replacement through this process here that they'll go out into the market and get bids for us.
Okay.
Copy. All right.
Over the years, those units have had significant hail damage.
Okay.
Mr. Chairman, I'll make a motion to reject the initial bid and rebid and modify the scope of work to amend the air conditioner units.
Thank you. Can I get a second?
Second.
We have a motion and a second. Any questions? Concerns? None? Roll call.
Lynn?
Aye.
Cosgrove?
Aye.
Captain?
Aye.
Ekman?
Aye.
Hingham.
Aye. Moving on to number 8, consider sponsorship of the Fargo Air Museum 14th Annual Celebrity Dinner and Auction.
Got a request from Ryan Thayer, it's kind of the annual request to sponsor the celebrity dinner and auction at the $2,500 sponsorship level, that's what we've done in the past. So I would recommend your approval of that.
Motion.
So move.
Second.
Motion and a second. Questions? Concerns? None? Roll call.
Lynn?
Aye.
Cosgrove?
Aye.
Captain?
Aye.
Ekman?
Aye.
Hingham.
Aye. Number 9, discuss increase in fuel flowage fee.
So this is an item that I've been contemplating for the last couple of years. I sent you a copy of the letter I sent out to the airline partners. The fuel flowage fee has been at 2 cents a gallon as long as I've been here, looking at increasing that to 4 cents effective on January 1st. This is a fee that is collected from the FBO. We probably assume that they do pass that on to their customers that are purchasing fuel from them. So for Fargo Jet Center and for Fargo Aircraft Maintenance, This is for all fuel and ground service equipment fuel that they would pump from their facility. The exception that has been in the agreements with the FBOs is that it doesn't apply to fuel that they would pump into aircraft that they own and operate in their business. So if Fargo Jet Center has a charter aircraft that they own and operate in their business, the fuel flowage fee wouldn't apply. And also the board had extended it to weather mod aircraft as well that they own and operate. But it would apply to all other fuel that they would pump into Delta, United, American Frontier, all of those commercial carriers, and then, like I say, any ground service equipment that they support here as well. It doesn't change anything for what SHOTS pays to us. They have their own fuel system. Fargo Air Incorporated has a community fuel tank, and then also
Does not affect
Group
them?
6. No,
Okay.
yeah, it does, yes, it goes from 2 to 4 cents, but there's no exceptions for those three entities, Fargo Air Inc., Group 6, or for the SHOTS group. It's just the FBOs that have the exception. So,
Motion, please. Motion. To increase, please,
I move the increase to 4 cents.
to 4 cents,
Pardon?
up to 4 cents, from 2 4 cents.
Up to 4 cents, yeah.
Yep, thank you. Second, please. Can I get a second, please?
Before I do that, so it's currently, what?
2 cents a gallon.
2 cents now.
Generated in 2021, $62,389. In 2020, it generated $44,312.
And how often do we address increasing the fuel flowage fee?
It could be considered every year. We just
Hasn't been
haven't
done
talked
for
about it.
years.
But gas is $7 a gallon right now for avgas and more for jet fuel, and it's just skyrocketed in the last year. And I'm just a little hesitant to raise it again while everything is so high. I just flew to Minneapolis and back this weekend. I paid $7.75 a gallon, and I'm just like, do I really need to raise it right this minute? Not really. It's just my personal opinion, but
And it was raised, or it was set last when?
Sometime prior to 91.
So we're 20 plus years without an increase.
sure.
Inflation,
Been over
I'd look
20
at it
years.
again next year, but I don't really want to raise it right now, but myself, because I'm the one who's going to pay it.
It's going down.
You guys don't fly, but I do, so.
I second.
we have a motion and a second. Any other discussion? Eric's voiced his concern.
Have.
Appreciate it. Roll call.
No.
Osgood?
Aye.
Captain?
Aye.
Heckman?
Aye.
Aye. Sorry.
No problem.
Can we,
Can you give me a ride to Minneapolis?
Yeah, sure. If I'm by myself.
just regarding the Fargo Air Museum Celebrity Dinner, do we have to indicate how many board members would be attending in case it would be more?
No, I don't believe so. We've never had passed, I guess I don't think we've had any board members passed.
I go.
Not there for purposes of the meeting, I don't think it needs notice.
And it's a
It's
public.
a public event.
Okay, all right, just checking.
I think there are 4 tickets that come with this, I guess we can let the board chair decide. 2 tickets leave and 4 free admission passes to the museum, so there's 2 tickets out there. In the past, we've allowed one of the volunteers at the information center to use the tickets.
Okay.
When we go preferences, we pay our own way and not use any of this and allow someone else to use the tickets.
So we'd offer the tickets to the volunteers at the information center.
Great idea. Okay, thanks.
One more on the fuelage flow, when is that gonna take effect?
January 1st.
Okay, thanks. Yeah, I remember reading that.
You can fly a little bit.
I can.
So, Jeremy, did you have any questions on that, Jeremy?
Philip.
Anything? They've been expecting it for
Give me a ride, I'll pay the 2 cents extra.
So number 10 and 10A, technically, receive communication from Mead and Hunt for design, North and South GA.
So Jeff is here if you have any questions. This is the start of the replacement of the concrete in the South General Aviation area, along with the expansion of the concrete in the North General Aviation area to accommodate the Fargo Jet Center project that they have underway. We did send this out for an independent fee review to Wes Schoen, and he came back and concurred that he came up with much higher prices for both of the proposals that we have here. You'd be welcome to email this out to you. For the Norchie expansion, he came up with $937,403.61. Leading up to the proposal before you today is for $819,900. For the South General Aviation expansion, he came up with, give me a second here, I have these written down. Where's the South GA expansion? Sorry.
That was 837 for the second.
Yeah, 837 for the second, and he was, 37, where's it at? $861,229.15 for the South Shore, so. So I would recommend your approval of both of these, design and bidding services contracts for the North and South Shore.
Motion?
I make a motion.
Second.
Second it.
Motion and second. Questions, concerns, conversation? None? Roll call.
Lynn?
Aye.
Cosgrove?
Aye.
Captain?
Aye.
Heckman?
Aye.
Aye. Moving on to number 11, receive communication with SP Plus.
This is their annual report to the board statement of gross receipts to just receive and file, so everything was in order. I guess I don't know if you have any questions or anything, I can get those back to Jason Finch at SP Plus, but it's the independent auditor's report for year ended June 30, 2022. So, things in there that surprised everything was in order.
Motion to receive.
I'll make a motion to receive.
Second.
We have a motion and a second to receive the report. Questions, concerns, anything? None?
Looked like it was,
Roll
all good.
Lynn?
Aye.
Cosgrove?
Aye.
Captain?
Aye.
Heckman?
Aye.
call. Aye. Moving on to number 12, receive change order from TF Powers.
Here's here, we don't have it in the official change order format, but that is coming, Leah's working on that. So they asked for an increase of $7,185 for some items that were added to the scope of work, the drywall repair, some additional flooring, wall protection, and sprinkler system modification. So I request your approval of their request. One of the things we want to remove from here is the flooring customs entry mats. That's separate, so we'll take that out. So the actual change order will be $325 less, what you see here. The customs is a separate deal. The agents have been complaining for some time about a real bad odor in the entryway to the customs office, so we had Powers go up there with Dan, and they removed the floor mats that came in. The mats were designed to be removed, but when they were installed, the customs, I don't know, I guess specifications, they were actually locked in, so you couldn't take the mats out. There's this gap between the mat that you walk in and below. And evidently, taking the mats out has alleviated the odor that they've been complaining about, but yet there's no circulation within that entryway. Has Powers finished that, Dan, putting it in? Still waiting for the tile to come in to replace that. So that's an explanation on that. So the change order that you would approve would be $325 less than the $71.85. Motion?
I'll make a motion to approve the change order for TF Powers.
As amended?
As amended.
Second.
We have a motion second. Questions, none? Roll call.
Lynn?
Aye.
Cosgrove?
Aye.
Capitown?
Aye.
Aye.
Aye. Move on to number 13, change order number 2, Board States payment.
Okay, Jeff, why don't you come forth? This is a change order that we've anticipated, but I think on Friday after this was sent out, there was even more information, so.
Correct.
Some issues.
So backing up a little bit, we got the East Economy lot. It was I think there were 203 stalls with the original bid. And then at the request of the airport authority, there was a change order for roughly $395,000 to add the 106 160 additional stalls. And on August, so Board of States is in the motion, getting all that work, and then on August 12th, Board of States sent me this schedule right here with for the project for completion. So what the change order is for is, or what I had proposed the change order for was a October 14th date for completion of all the paving. So there's concrete paving, bituminous paving, sidewalk, that kind of thing, as well as the infrastructure needed for SP Plus to come in and get the gates installed, so all the conduit, all the power, all the comm lines, just to give them enough time to get that installed before the end of the year. And then I had proposed a final completion date ready for acceptance for the 28th of October. On this schedule, they had all the paving done by the 10th of October. I had the 14th, so I was giving them the benefit of the doubt. Then their final completion date was the 21st of October. I gave them the 28th, so again, giving them the benefit of the doubt based on their schedule. The reason why, we want the paving done as soon as possible is because, weather is so unpredictable this time of year. So we could pave well into November, just depends on the year. 2 years ago, we had to shut Northern Improvement down. I think it was around the 10th of October because it was too cold and all the bituminous, you couldn't get compaction on it, was tearing. It's just a crapshoot. So we want to, make sure they get the work done, obviously, when the weather allows, to just get it done and not sacrifice the quality of the product at the end of the day. So I had proposed those dates to Board of States a week and a half ago, prepared the change order, sent to the airport authority. Now they've come back and they want to extend the paving till 4th of November. And then the final completion date till the 21st of November, which I don't necessarily have a problem with, but I can't predict the weather. So, as an example, I think if we extend the completion date, just in my opinion, is it just kind of breeds complacency within the contractor not to take advantage of the good days that they have now. To get the work done. As an example, they weren't working on Saturday, when the weather is beautiful, but then they want extra time at the end of the project too. So I have my hesitation if, that they'll even sign a change order if we don't give them the dates that they're close. So, at the end of the day, they still have to build it properly, and if it's not, it gets rejected and not paid for.
Was the prior issue with lighting resolved? The lights were here now.
My understanding is the light poles are scheduled for delivery in December, so that doesn't account, their time request doesn't account for that.
Yeah.
So
it's excluding the lighting, and the minute they're here, they'll do it
correct.
real time.
Right.
And will the light poles be delivered on site or to them?
I would assume they just deliver right to the site, so. My biggest fear is like, say we get a cold November or October and they can't get it done. And now all of a sudden, there's, you don't have a way to collect revenue off of the parking lot over the course of the winter because it isn't. So, and they don't have a plan in place to accommodate that, so.
So our options are to sign an extension and risk it not getting completed, or we don't sign an extension, and what's the recourse on that one? The consequence?
Technically, they're supposed to be done with the project by next week because the original completion date is the 16th of September.
But that's excluding the additional spots.
That's excluding the additional spots.
So when we expanded the scope, we expanded the
Correct.
length of time to complete it. Our goal is just to have a hard surface there, the rest I don't care about. As long as there's a hard surface to park cars on, that's all I care about for this coming year.
And SP
If they
Plus,
happen to get it done, great.
so SP Plus can get, they'll be able to get in and put their gates and tracking stuff in, regardless, right?
Possibly. I mean, there's work to be done at the entrance and exit lanes.
But that's on concrete pad, not on asphalt.
Yeah, it's on a concrete median, so,
There's a lot of big piles of dirt over there right now. I don't think
I
they're
know.
gonna be done next week.
like, obviously, so.
So November
I-
4th,
I mean-
November 28th.
Excuse me,
November 4th, November 28th, that's the dates.
I think it was the 21st, but
November 21st.
Yeah. if I said
It's not in here, but okay.
I don't have any problem extending it to November, I really don't, it's just, the risk, it's the risk, so.
When they agreed to do the additional 160 spots, what was the timeline then? It was November?
It was still the 16th of October,
Okay.
so. And, at the time, it's, or September, at the time, I said, I can't go to the, they were having problems with getting their subcontractors show up and do the work, and I said, I can't with good faith go to the airport authority, and ask for a time extension, extending it well into the fall if we don't see progress on the initial work, so.
Border States is a good reputable
Yeah.
contractor, they're gonna stand behind the work as they did in the car with the lots and other things that they've done for us, so I think we give them the benefit of the doubt and it gets done when it gets done, so.
Is
I hate to
there-
rush it and sacrifice quality.
Well, I would say we give them that benefit, but we put a penalty clause in. If they can't get it done, they're penalized. At this point, extending is one thing, but maybe we
And
penalize.
that's a $1,600 a day penalty.
That waived for weather,
No,
there's no
No,
adverse.
again, it was beautiful on Saturday, there was no one working, so.
What if we held the original date on the original project and just extended I know they're gonna do it all as one, but just, as Sean said, so we'd have at least some pavement for the original spaces, given the extension of.
They do it all.
I know.
They're gonna do the whole thing.
Correct, yeah. Greg is right on that.
Yeah, no, I understand, it's just saying that they've got to.
What's the middle ground between yours and theirs? What would be the?
I guess I would say that, a couple of things. One is, at least having the paving done by the end of October, which is a Monday. But then they also need to take advantage of, any good days on weekends to make up for lost time. It's
What's the temperature range they have to operate with asphalt, 50 degrees and rising or something?
Yeah, I honestly, I don't recall what it is offhand, it's roughly that,
By the end of October, those days are getting
correct.
pretty few and far between.
The advantage Border States has is, their asphalt plant is, a mile and a half north of here, and, so, obviously it's not a long haul where the mixes are cooling down and, sacrificing the quality there, so.
Jim probably remembers when the original car rental lot was paved, it was a snowstorm.
Oh, my.
Excuse me, say that again?
There's pictures of them out there in the snow paving. put the
Oh,
final
yeah.
Lift on the car rental lot. At 85. It was a snowstorm.
Go ahead.
I was just gonna say, I mean, I wanna work with them and, because ultimately they need to build it and we need to get the parking lot paved for the benefit of the travelers here at the airport, so, but at the same time, I mean, I just don't want them, saying, demanding this is what we want for completion date, so.
I would say give
In the
it to
same
them.
token, they've got to take advantage of the good days, whether it's
Correct.
Saturday or Sunday.
I'd say give them to the end of October. Completion, understanding the lights aren't gonna be on anyway, but that's the only
Yeah.
accommodation.
The lights can wait, or they can do those anytime. If they got the base there for the lights, they can put that up in January.
Well, I don't want the lights sitting out there for 2 months.
Well,
either,
no,
So,
no.
can we add that on disposition of the lights or on receipt of the lighting equipment within 7 days they install?
Absolutely.
How do you feel about that? I
think
just don't
that's
want
fair.
stuff
I think
sitting out
that's,
there. Right.
Certainly dependent upon availability of a contractor to install it at that particular time.
Well, there's 1, 2, 3, 4.
Mr. Chairman, I'll make a motion to approve an extension for the paving until the last day of October.
Inclusive of lighting installed 7 days upon delivery.
Sure. Yes. Inclusive on lighting
I'm
being
fine with that.
completed within 7 days after delivery.
I'll second that.
Okay, motion and a second. Any questions? Roll call.
Aye.
Osborne,
Aye.
Compton.
Aye.
Heckman.
Aye.
All right, thank you.
Just stay right there, Jeff, so, here's the living document, I don't know how many CIPs are out, but it should be the one September 9th of 2022. This one was revised after Jeff had conversations with Monica Weddle from Legal Witness Horton, who was doing our financial modeling for the terminal expansion project, and some changes were made. The only thing that I'll, mention in there is there's a lot of assumptions that are made in terms of certain grants that we may or may not receive, and that's the bipartisan infrastructure legislation, the bill grant. Those are wild assumptions, have no idea if we'd ever receive those. Pretty certain on the CARES development grant, we have those funds available for those projects as identified. And then, of course, the other uncertainty is anything that we would get with discretionary grants or the bill terminal funding grants and then anything from the NR's commission. None of those are certain from there. So this has been revised. The other reason why it's revised is as we get bid prices in, actual bid amounts, those numbers are added to the total cost, especially in the 2022 range. So I don't know if you have anything else to add, Jeff. But,
Yeah, I guess, the previous version that I think that you had all received before, I was able to get a hold of Monica was like on, in 2024 and 2025, I had the cost of, let's see here, the bill terminal funding amount for the terminal project was substantially higher. I don't recall the exact dollar amount, but it might have been around 17 million or so. That she had suggested reducing that to 8 million. You can ask for 17 million, but she suggested reducing it to 8 for 24 and 25, simply because that is what other airports receive that are similar to Fargo in the first round of this bill terminal funding grant distribution. So, so just to make it more realistic, I guess number. You can ask for more, may not get it, but so that's a significant change. It's just shifted to a local.
first terminal funding grant, we had asked for money for the gate 4 bridge and then also to reimburse for the terminal area study. So those are around $2 million. Had congressional support for it, and the only airport in North Dakota that received money was Mont, Dakota. So the next $1 billion will be up there. There's $5 billion that's allocated by Congress to this program. The first $1 billion is already gone. Now airports will be applying for the second $1 billion for the next fiscal year. Those applications should be coming out here fairly soon.
Yeah, and then just to give you a sense of magnitude, and correct me if I'm wrong, Sean, but the first $1 billion that came out for 2022, there was $14 billion worth of requests.
No.
So very, very, very competitive. So
The expectation is there'll be over $20 billion in requests for the next spring. So it's a very competitive process. We engage with the delegation and they do what they can, but we'll see.
and for that very reason, this is this CIP is always updating where the pot of money is coming from.
So in that column, bill terminal funding grant, if we don't receive that money, that's more money that we need to borrow for the terminal project.
Okay.
Thank you.
Yes.
And if it changes, Commissioner Strand, this was sent to you, and also Mike Redlinger for ongoing distribution to the other commissions. Hopefully they did receive the one dated September 9th, Commissioner Strand.
Thank you, Major Chair.
All right, Move on, number 15, airport construction security update.
I'm trying to give you an update on the parking lot already. The only thing we have on the checkpoint, and Darren can correct me, and Terry probably knows this, the 2 windows were replaced, but they're the wrong windows. I'm not sure what happened there.
You have to do it correctly.
So they're aware of that, and they'll change it. They're still waiting for the baseboard to come in. And then there was some damage to the window frames. I don't know how to describe it. They drilled through some of the window frames out there, and those frames, even in the new expansion, aren't gonna change. So we've asked for that to be corrected as well, and I'm sure the contractors.
Yeah, we're looking into that.
I guess anything else, I don't know, as far as security, the 3 lanes have been open and operational. There is a pre-check event here starting September 26th. I think they have 60+ reservations. It's probably grown since then, so people will show up and they'll take walk-ins as well to do the TSA pre-check. It's like 8 to noon, 1 to 5, September 26th through 9 to noon, 1 to 5, okay. So
How do
nobody-
people apply for that?
You can go online and go through the whole process, and then when it comes to where you book, or you finalize your process, you would just pick the airport location. Otherwise, the other option is going postal down on East Street. So it should give you an option to come to the airport.
Okay. So only on September 26th, you can still go to the airport, or to the post office as well, the whole week?
To going postal, not the post office. It's
Yeah.
on East Street.
Oh, going postal.
Yeah. But they only have certain hours too, I think, where they do it, so.
Okay.
I don't know, anything else to add for construction? Jeremy, anything you wanna add? If you wanna come up and give us an update on your hangar development, everything's good?
Everything's good. Yeah, no real update.
Okay.
Going well.
How's our exit plaza going, Terry? Parking extra.
Plans is going well, you can see the skill's all out right now, they're spending this week doing utilities, digging utilities into the facility, and next week they'll start grading, and if weather isn't a problem, they could even start doing some paving next week, so.
Awesome.
I believe August was the second busiest August on record here, after a miserable July, so we're still doing it. Still seeing some flight changes. Had some official with American Airlines here last week, and you know, the regional airline situation that they're in with Envoy and their other partners is in dire straits, so they've talked about reducing frequencies that a number of markets are putting in mainline flights. So we have 2 to Dallas, 2 to Chicago, and American traditionally that would be 4 to each of those communities. We may, you know, at some point between now and April, go to 1 mainline flight to each of the markets as they struggle to find regional carriers. We'll see. American did sign a contract with Air Wisconsin that starts in April of next year, which should improve their ability to provide service to the smaller markets, but then that puts United into a bind right now. The Air Wisconsin is currently number of our flights right now to Chicago and Denver, so it's an ever-changing situation, so we never know what to expect 30 days out with our flights, so I guess that's all that I have.
The only thing I would add is that we have offered to all of the city commissioners to sit down and walk through the CIP and the expected budget process and construction process for the next several years. So there's an understanding of why we asked for those mills, and we're in the process of doing that, and offer it to any commissioner that wishes to sit and understand it in more detail. So,
Mr. Chairman, you might also want to update on the meeting that we had with the mayor.
yes, go ahead.
Well, we had sort of an informal meeting with the city to talk parking garage. And what came out of that was the city and the airport authority would share in a joint study to see if we can agree to what the cost of a 500 stall garage would be. And so that we jointly kind of come to that conclusion. And then we look at how that could be financed. It's not a commitment that we're going to build a parking garage, but if we can simply agree, because the city's numbers are quite a bit lower than what we've seen in other situations. So to do this study, to come back and be able to say, this is a $25 million project or a $50 million project, is pretty critical. But once we have the number, then the discussion will become, can the city participate in the cost of that? What would that look like? And would it be mills, special assessments, general fund money, who knows? But once we agree on the number, we can then kind of back in through the revenues. Rick was right, we should add another $1 in the long term to help pay for it, but to see if there's a joint way to build a parking garage. So,
Good first meeting.
Sean, I think you and Jim Gilmore have got together on the consultant.
Well, I've talked to Scott Fromming at Walker the day that after we met there, and he wanted maybe up to 2 months before you have a proposal together. He was gonna engage Meat Hunt and T.L. Stroh, who did a significant amount of work out in soil studies and other things. And then also the SP Plus group, who we had just worked with earlier this year on the feasibility studies. So he's putting that together, but was busy with some other projects and timelines. So I'm guessing we'll hear from him sometime in October.
So if this were something that would go on, it would be through the process with the city and their budgeting going forward for 2024, correct?
That would be the earliest.
Yeah.
Yeah, if it's to add 1 mil or more.
But the idea was if the terminal's gonna be expanded, everything else, is this an option? And what can we do? I see in 2037, we're only 875,000 in the hole in the capital improvement project.
Yeah,
So,
that's pretty low.
yeah. I'm pretty sure I won't be here.
Anything else for the good of the order? Meeting adjourned.